Good morning, everybody. Thank you for joining us this Sunday. We actually decided to switch it up a little bit in case people like to watch football on Sunday evenings. And we have Patrick Dunuwila from TheChartReport.com. He's the editor of this group, and they really focus on curating charts and showing all the best charts on social media and different platforms. So I'll let him introduce himself a little bit here in a second, and we'll get started. Quickly, disclaimer, anything we talk about today is not a buy or sell signal or advice what to do. Everything that we're going to talk about is more a way to highlight some of the features on TrendSpider that may make your technical analysis or trading more efficient. And so definitely just want to let everyone know that up front. So for those who have not heard about TrendSpider, and we'll go through this quickly, but we are a charting platform at the base, but on top of that, we have a lot of different features that make us unique from anything else out there. Some of the things include automation of manual processes like trend lines, Fibonacci levels, the ability to overlay multiple timeframes on a single chart, and then our Raindrops, backtester, and more. We'll go into a lot of these different things within the presentation. And really at the end of the day, we just want to continue building the world's most innovative and fully integrated trading platform and technical analysis platform out there. Some of the problems that we're aiming to solve with the features that I just mentioned are bias and curve fitting, hand-drawn inconsistencies, fear of missing out. These are all things that are very easy to do when you're doing technical analysis manually. So you have the ability to draw into a bias that you have based on the position. You may be over leveraged. You may just have fallen in love with the stock when really, you should be letting a kind of secondary source give you a perspective so you're keeping bias out of it. The automation of trend lines also helps keep hand-drawn inconsistencies out of the process, and it really keeps things consistent across any charting, any ticker that you're looking at. On the alert side of things, we've got timing inefficiencies and impatience really focused on removing that, because at the end of the day, you don't need to chase a stock or an ETF or the market in general. You want the market to come to you. And so these alerts give you the ability to set areas that you're watching, let the market come to you, and then you decide if you want to move forward. And Patrick will be talking a lot about that in his presentation here shortly. Some of the main functionality I did mention above: the backtester, the automated technical analysis, proprietary indicators from other big names in the industry, such as the anchored VWAP from Brian Shannon, multi-time frame analysis, the alerts, which we just talked about, and volume profile in a candle, which is the Raindrop. And we'll go into that more after Patrick is done showing some of his charts. And I'm going to hand it off to you, Patrick, and thank you so much for joining us again.
Oh, thank you for having me. Yeah, so just like a little background about myself. I've been interested in markets since I was really young. Both my mother and my father were financial advisors, so I was kind of always interested in it. And when I was around like 13, my dad gave me some money and said, pick a company that you think will do well over the next few years. And I remember like the iPod mini had just come out, and so I picked Apple, and I did pretty well. And I wish I could say that I was still holding on to it, and but I think I sold out like after the first pop where I made $1,000 or something. I was so ecstatic. But sometimes beginner's luck can be a dangerous thing. You feel like a genius and you feel like everything you touch will turn to gold. And
Yep.
As we know, the markets can humble you very quickly. But I think that's what kind of led me down the path to technical analysis is, it offers a way of risk management and a way to kind of tune out the noise. After taking some losses on trying to trade earnings reports or biotech stocks or something where I had no business trying to throw my hat into that arena, I was kind of attracted to technical analysis because at the end of the day, what's going to make or lose you money on a position is whether or not the stock is going up or down, whether or not price is going up or down. So the idea that you can, find trends by looking at price charts and stuff like that was really appealing to me. And so, now I'm level 2 CMT, and I'm taking my level 3 in December. And I would highly suggest anybody who's interested in furthering their technical analysis knowledge, or getting a more formal education of it. It's a really great, because it's good to have a authority like the CMT Association defining these terms. Like if you go on my Twitter, I have a pinned tweet there that says the thing that gives technical analysis a bad name is that there's simply so much bad technical analysis out there. And that's what kind of led us to the idea of the chart report. Is, kind of, we think a lot of financial media out there does a poor job of helping people navigate the market, and there's a lot of sensationalism and stuff like that. And we wanted to kind of cut through all that and report on markets through more of a technical lens, and more through data and price, and talking about sentiment and stuff like that. And kind of highlight what the best technicians are talking about. And we write articles that do that, kind of finding themes that we highlight. But one of the main things of the chart report is the daily email, which I would definitely suggest people sign up for. It's completely free. We're not trying to sell you anything. Can you see my screen here? Oh.
Not yet. If you go to Actions and enable screen sharing, you'll be able to share it.
Okay. Yeah, so this is basically what the daily email looks like. You have our favorite sponsor right here. And there's like kind of 5 elements. We have a summary where we kind of hit on different asset classes here. And then we have the chart of the day. I try to find something that really stands out to me, or if there's a big move in a stock that day or something interesting, I try to just highlight it there. The quote of the day, that's something a lot of people like, and it's one of my favorite things to do. I try not to have just finance people, but also, like this one's Mark Twain. And it's amazing how applicable some of these non-finance people's quotes and thoughts are to markets. Like this one, whenever you find yourself on the side of the majority, it's time to pause and reflect. And that kind of hits that herd mentality and stuff that we see all the time. Then we have top links, and the first one, we usually have an article of ours where we are highlighting a theme that is being talked about a lot, and the rest are from other good technicians, and it's all technical analysis related. And then you have the top 10 tweets, but going back to the chart of the day, so this is the chart report from Friday. So Chad Shoup here, I thought this was an interesting chart. So this is a chart of Tesla. It's a daily candlestick chart of Tesla. And Chad pointed out that price has kind of been working its way into this wedge. He calls it a wedge. I would more call it like a symmetrical triangle. But regardless of what you want to call it, what's really happening here is this pattern represents a growing frustration between buyers and sellers. And it's fascinating because, if you've been on Twitter, you'll know Tesla is probably one of the most contentious stocks out there. The bulls feel very strongly about their position, and the bears feel very strongly about theirs as well. And it's kind of, price is kind of working its way into a point here. And I've heard this pattern kind of described as, or like, an analogy is like the tightening of a spring, where as you tighten that spring, the energy potential is building and building to a point where you remove the resistance point and price makes a big move in one direction or the other. And in this case, typically these consolidation patterns tend to resolve in the direction of the underlying trend. So if we look at Tesla on the chart here, I've already drawn like the same support and resistance lines that Chad had on his chart. But the nice thing about this is, like, in my chart of the day summary, I ended by saying it'll be interesting to keep an eye on this chart as the breakout could occur as early as next week. Because, as you can see, it's really reaching that decision point, that apex where we'd expect it to break out and start trending in one direction or the other. And you know, I look at a lot of charts. We all do. We're all pretty busy. And one of the great features that I like TrendSpider the most about is being able to set those alerts. And if you kind of forgot about the setup or something, you'll be reminded when it makes that move. So, you know, in this case, I would probably just put something here and name it Tesla breaking down. And then on this one, Tesla breaking out. And you'll notice that I give it a few days, and I'm okay with letting it kind of go in and out of that trend line a few times, and I'll explain why. It's really because I want to be notified if there's a failed breakout, because that's a very powerful move that I'm going to spend most of this presentation talking about. And so what a failed breakdown really is, I think a great example of it is crude oil recently. And I'm going to use USO, the ETF that tracks WTI crude, because I don't think we can set alerts on futures. But so right here, this is a daily chart of USO. You might remember about 3 weeks ago over the weekend, there was that drone attack on the Saudi oil fields. And when futures opened on Sunday, price gapped up like 15% or something and made a crazy, like it kept going to like 18 or 20% maybe. And I think it ended that day up about like 15%. So this is that Monday after that oil attack. And on that day, sentiment just got crazy bullish all of a sudden. You know, you had that breakout, but also, you know, like I have a few articles here, like this is Reuters, analyst view, Saudi attacks raise specter of oil at 100 a barrel. You know, another one from Forbes. I mean, they're talking about $100 a barrel oil all of a sudden, you know, on this one move. I mean, you can tell sentiment just got crazy bullish all of a sudden. And within the next day, price gapped up that day and then finished that day actually below that trend line. And you can see that the failed breakout was really confirmed by it closing underneath that trend line that it broke out from just the day before. And we always have this phrase that out of failed moves come fast moves in the opposite direction. And it might sound like a cute phrase, but I forget who said it. At this point, it's kind of just become an aphorism among technicians. But what's really going on here is on that breakout, everyone's expecting it to go higher. So everyone gets long here. And then when it doesn't work out, they're trapped. So it causes this sharp move in the opposite direction. And, you know, if you had your alert set, you know, what I was talking about before, where I give it a few days, where, you know, you want to be notified if it breaks out, but then I also want to know if it re-enters that trend line, because that means that there's a very good chance that I'm wrong. And it's a good indication that, hey, you want to flip sides, if anything, because it can be a sharp move against you. I have a few other examples of a failed breakout here. Alibaba, if you go back. So price broke out in last summer, and they broke out to a new high around 206. You can see it traded there for a few days, but was unable to hold those former highs, and you have this sharp sell-off. And within 4 months, I think the stock fell about 33%. And even now, it still hasn't recovered. I mean, it's still down about 15% from those highs. So if you had that breakout alert, I mean, we want to be buying breakouts. It's perfectly reasonable to be getting long at this point. But then if it doesn't hold those former highs, if it doesn't hold that breakout, those failed breakouts are really violent moves. And you know, even if you didn't want to go short here, it's certainly a good way to manage risk and to identify that you definitely want to be out at that point, because all these people who bought the breakout are now trapped and they're looking for a way out on the way down. It's just going to cause a lot of selling. And as you can see, the 200-day moving average rolled over, and yeah, it's been a mess and a headache ever since. And even if we kind of zoom out into the weekly, and this was that failed breakout, and it really has just kind of chopped around ever since. Another example, Intuitive Surgical. Now the stock, this has been a pretty powerful uptrend ever since I think like 2008. But earlier this year in April, you can see kind of a similar setup. Broke out to new all-time highs, spent about 3 days above those highs, but then closed below it, confirming the failed breakdown, and you get this sharp move lower. And I think it fell about 20% over a month and a half, fell beneath the 200-day moving average. So this is really a good way to manage risk, and being able to use the TrendSpider alerts to alert you, yes, it broke out, but then if it falls beneath that within even a few days, that's definitely a sign that you want to get out of the stock. Even if you're not going to go short or anything, you just don't want to be long. And there's also failed breakdowns too. One of my favorite examples is the 10-year Treasury note. This is TNX. So in 2016, it broke beneath the 2012 lows here. And this is a weekly chart now. So this is 1 week candle right here. And you can see it led to this massive rally here, because anybody who got bearish or anybody who got short right here got trapped, and they're quickly forced to cover, sparking that massive rally and really a trend change. So if we looked at this in the daily chart, you can see it really only spent a couple days beneath that. So if you had the breakdown alert, it's good to leave, like when you set your alert here.
Oh, yeah, you can't make it.
Yeah, but when you do set the alert, you want to let it go for a few days and allow it to cross a few times, so that you are alerted if it does in fact get back above that level, especially pretty quickly, because then that can cause those really fast moves in the opposite direction and really catch people off guard. And that trend lasted for over a year until it finally broke there. And when it broke that trend line, that was a pretty clean trend line. And when it broke that one day, I mean, that was a total trend change. You can see the 200-day moving average rolls over there. And, you know, we've been in this nasty downtrend ever since. And now we're approaching those lows where we had that failed breakdown from before. So I guess next we'll just we'll take a look at some of the trends that I think are kind of important to watch for this next week, and just some important charts that are breaking down or at interesting spots right now. One of them is XLK. That's the technology sector spider ETF, and I thought this one was interesting because I think it was Tuesday. Price broke down, as you can see by that highlighted little red circle there. Price broke that trend line, and this uptrend line has been in place since the 2018 lows in December there. So it's been riding that trend all year, and it broke down there. And I noticed a lot of people on Twitter and even on the chart report, people were saying, you know, oh, XLK is breaking down and all that. But yes, it gapped down, but it gapped above that on Friday. So, you know, this is kind of on failed breakdown alert. So you could see a pretty strong move. Now that it's back on that trend line, it wouldn't be surprising to see a pretty powerful move upward within the next couple of weeks or months. Another one, Starbucks here. Now this one's interesting because that trend line is very well defined. I mean, to me, the more times a trend line is touched, the more it becomes validated. Like every time it touches it, it validates that trend line more and more. So when it finally breaks that well-defined trend line, it's definitely something to pay attention to. And it's telling you that, Starbucks has been a great performer over the past year or two, but now it's telling you that, you might not want to be long this one, or it might not have the kind of momentum that it once did, or it did over the past year.
And you got holders of Starbucks too. So I think you got Bill Ackman. What does he have, like $1 billion worth? So it's always fun when you got some big guys in there. They can really move the market.
Yeah, sure. Yeah, I'll just show some like other stocks that I'm watching right now. I think another important one to watch is Microsoft. This is the biggest holding in XLK, and XLK represents a huge, the technology sector represents a huge part of the market. I think this is probably the biggest weighted stock in the S&P 500 too. So definitely one to pay attention to, especially as it's approaching those all-time highs in that breakout level here. This was a great trade when it was breaking out of this base here. And, you saw it go right to that 161.8 Fibonacci extension, that golden ratio. And then it kind of sold off, and now it's back above that. And now that it's back above that 161.8 level, I think this would be a good level to trade against. So, you could have your stop there. And, if it does dip, you could be buying on the dips as long as you have a stop there and you're willing to be out by the time it's there. And you can, certainly use the TrendSpider alerts to make you aware of that if it does approach that. And I just think having an alert system for any traders, especially technical traders, is essential, because we look at so many charts that, we can easily see a good setup and forget about it, or not be ready or aware when it finally does come to the point where you wanted to buy. I guess that's also one good thing about technical analysis versus fundamental analysis is, technical analysis, you can apply the same principles across not only a lot of different stocks, but a lot of different asset classes too. I mean, you can use the same principles to analyze corn futures as you can Microsoft stock or Bitcoin for that matter. Whereas fundamental analysts, there's a reason that they tend to be specialists in their specific industry. You'll have a fundamental analyst that's a healthcare analyst, because they have to know so much about that specific industry, because there's so many factors that influence, fundamental factors that might influence the stock, that you almost have to be an expert in the field in order to have any chance of forecasting correctly. So the nice thing about technicals is that we can look at just about any chart and try to find trading opportunities there. But because we have so many opportunities, it's hard to keep track of them all. So it's nice to have these alert systems. And as you can see, I put an alert here when Microsoft breaks this new high. And I put a little sensitivity around it because, we don't like drawing support and resistance with a thin line. We draw it more with a wide tip marker or crayon, because there's kind of a natural vibration to things, and things don't always go to the level to the penny. So it's good to give it a little bit of leeway. So that's what's nice about those alerts as well. One stock that I really like right now, I actually have a position in it right now. It's Taiwan Semiconductor. And I'm sorry if the chart's kind of messy here. We'll start off in a weekly. And real quick, just for when I'm looking for chart setups, what I like to see is basically, first of all, it needs to be in an uptrend in both the daily and weekly time frame. And what I mean by that is trading above the 200-day moving average in the daily and weekly time frame. And it's really useful to be able to use this multi-time frame analysis. And so right here, you can see that Taiwan Semiconductor is in fact above the 200-day moving average as well as the 200-week moving average right here. So we got it that it's in an uptrend. The other thing I like to see is that it's breaking out to new highs, or at least pressing up against new highs after coming out of a big base like this. You know, price didn't make any forward progress for months. I think in this case, even more than a year. And when it finally breaks that level, it can really run from there. You know, we always say markets correct in two ways, through price or through time. And this is kind of a correction through time. And so I look for something in an uptrend, pressing up against 52-week highs, breaking out, and coming out of a big base like that. And I can show you a few different setups where that's really worked. So yes, I'm long Taiwan Semiconductor right now. I'm doing it through options. I have the January $46 options. The reason I went with January is because when I buy options, I like to go out at least 90 days. And then I like to be out by no more than like 50 days till expiration, because as you get closer to expiration, some of you might know theta decay really starts to hurt you, because time value really drops off and accelerates as you get closer to expiration there. So I plan to be out of these by probably early December. But I'll show you a trade that I got stopped out of this weekend, even though I liked it. It's JP Morgan. As you can see, kind of a similar setup, right? Like breaking out of a big base, pressing up against all-time highs. But if we switch this to a daily, you can see it didn't hold above those former highs. So now I would say that the risk is to the downside, and I wouldn't be looking for any longer term breakout until it can get above these most recent highs. So it's kind of on failed breakout alert right now.
Yeah,
I was on Real Vision earlier this year talking about Visa, and I put a line here for when that trade came out. But again, kind of a similar setup. Stock was in an uptrend on the daily and weekly. You have a big base breakout here. And by the way, when I have these Fibonacci extensions on, I usually draw them from basically the height of the base. And then I use the 161.8 extension, that golden ratio, as my first price target. So in this case, the trade idea came out here. I think I recommended buying it on weakness around 150 here at those former highs. And, went on to hit that 161 extension and just kind of base there for a little. And now it's interesting to see that 161.8 extension has kind of served as support a couple times here. And now, as long as it stays above that level, I think the next stop would probably be this $200 level. The stock's still in a great uptrend, and it's kind of been consolidating for the last few months here. And I'll show you one more here. This is another one I pitched on Real Vision. It's Sunrun. Kind of a similar setup. I don't mean to sound like a broken record, but I think it's good to have a repeatable process. So, you have this big base where price didn't really make any forward progress for over a year. And then, you finally get the breakout to all-time highs. You use that 161.8 extension, and it's been riding that trend. So it hit my level intraday, and I took about half my position off here, and I left the other half on to run. But, then it started fading a little bit, and I took the rest off here when it broke that trend line. I got an alert and said, you know what, I took some off already. I'm still at a profit. One of the worst feelings ever is having a profit and giving it up. So I ended up closing out the trade here, and as you can see, it once it fell off that trend line, it really took a nosedive and has been kind of just flirting with that 200-day moving average ever since. So yeah, that's kind of the typical pattern I look for, big breakouts out of a long-term base. We always say the bigger the base, the higher in space, and it's really true. I don't know what it is about those breakouts, but they really, when it's coming out of a big base, it can really run.
Oh, absolutely. You just got so much, like you said, kind of spring loaded at that point. It's just so much energy building, and when it goes, it goes.
Yeah.
And it's funny. Is it a function of people buying? Is it a function of people getting short, squeezed? And no, but it's always interesting to see how those really break out once you just kind of consolidate there for a while, especially right in that wedge, or no, the ascending triangle.
And to me, that's another reason I really technicals really appeal to me, is because they give you a level where you're wrong at, where if you have a fundamental thesis, and I think you touched on it earlier in the introduction, where you said part of what you guys are aiming to do is remove bias. And I've known traders who, for example, a guy I know, he was super bullish on GoPro, or I'm sorry, he was super bearish on GoPro, and he just couldn't let go of his thesis. And when price started working against him, his thesis didn't change. His feelings towards the company did not change.
Mm-hmm.
But price had changed in a big way, and all of a sudden it started gaining momentum, and the guy ended up blowing up his account because he had an opinion. And what technicals help you do, if you're disciplined in obeying them, then it gives you a level where you're clearly wrong at, and it just kind of simplifies things a little bit, in my opinion.
Yeah, absolutely. So true. And no, we really appreciate you jumping on and showing us your strategy and, what you guys look at on a daily basis. And make sure to check out the chart report. They do a daily email. I get it every day and I check it out just to see what's kind of new and what everybody's talking about. So I'll take it over from here, just show a couple charts and add to Patrick's presentation in regards to false breakouts and false breakdowns. Just going to go over a couple examples of that and how to use the raindrops to kind of look at these areas as well. So I will go ahead and share my screen real quick. Alrighty. One thing I want to do real quick is go over the raindrop for those that are not too familiar with it. The raindrop is a volume-based candle rather than a bar chart that has an open and a close. You've essentially got a bar chart as the first part of the candle. So you've got your two bars. Usually this would be an open. This is the VWAP for the first half of the period. This would be your close. This is actually the VWAP for the second half of the period. So it's simply just applying VWAP to a regular kind of candle way of looking at it. So the difference is you've got the volume profile actually painted on the first and the second half of the chart. So in this case on the left, you can see this is the low of the day down here, similar to any other candle you're looking at. And so you can see a lot of that volume profile is focused around the low of the day. Let's say this is a daily candle. You can apply it to anything from the 10-minute candle to the daily. So let's just assume this is a day. First half of the day, very low volume or very concentrated volume near the low of the period. And then you can see during the second half, all that volume profile starts to move to the upside along this daily range, which continues to increase as the volume kind of comes into the second half of the period. So it's really there to show how volume is flowing and showing where buyers and sellers really are throughout the price range. Quickly over to the different types of raindrops. You've got your bullish raindrop, which is what we just went over. The VWAP for the second half of the period is higher than the first. You've got a neutral raindrop or a raindrop doji, where the first half VWAP and the second half VWAP equal each other. And you've got this very blue dash purple. Some people call it purple. Just depends on kind of how you're seeing that. But it's really what we call a true volume doji. So it's something that doesn't take into account the open and close. It's really taking into account the equilibrium price for the first and the second half of the period. Bearish raindrop is just opposite of the bullish. You've got your volume profile clearly almost exact opposite of what we had here, where you can see during the second half of the period, a lot of that volume profile is moving toward the low of the day and actually creating new lows. And we know this because there's no volume profile here. It's just flat. So during the second half of the period, all of that volume started to push down. We know sellers are in control because price is lowering. And so you can really use these on specific areas of breakout resistance or breakdown support. And I'll go over a couple examples of that here. Let me just go to IWM because this is really just a classic example of this. And what you can see here is we did this presentation on I think it was the 15th, 2 weeks ago, and we were looking at this area of resistance where, on the hollow candle, you can see these wicks, and you can see, this isn't the most bullish candle here or bearish candle. It's kind of like almost, inverted hammer here at the top, or shooting star at the top of resistance. And you can see that, buyers definitely could not close the price over this line. But what you can do is you can switch over to the raindrops, and you can see definitely that volume was also not supporting the price here. So we got this area, just resistance, extending that line. During this part of the candle, the first half, very low volume, barely any volume profile above this line. Second half of the period, no volume profile above this line. All of that volume profile was focused at the bottom. Here, you tried to kind of have a little volume above this area, but still, there's not, you really want to see like a big bulge here, showing that buyers are definitely in control. You had a little bit of that, but not something that I would say was too convincing. And this is something that you utilize with a ton of other stuff. This isn't just, I use the raindrops from now on and nothing else. This is a way to just add another tool to the toolbox. So if you kind of compare that with QQQ, which had a very textbook example of this back in October and December, you'll see when we did break out here, you had a lot of volume profile above this line. So you can see here, during the first half of the period, there was no volume above this line. During the second half, you can see buyers came in big time, really supporting the price above this line. And you can see this is almost the same exact thing we just had on IWM. The false breakout, low volume above the line, no volume during the second half of the period, with all of that volume aggregating below the line, and then you've got your hard breakdown. So this is a way to kind of complement what Patrick was talking about, where you're looking at a specific area and you can kind of get an idea if buyers are in control when that breakout occurs, or if sellers are in control when that occurs. So we can look at even SPY, and we can see on Thursday and Friday, especially Thursday, you could see once we bottomed out here, and I'll go into that in a second, why did we bottom out here? What caused that bid to come in? And what you can see, same thing. You've got a lot of the volume focused at the top of the range on Thursday, showing buyers were clearly in control. And you can actually see that in this particular candle that, this created a new high into the second half of the period because there's no volume profile here. And you can do the same exact analysis on this one, which is the opposite, where on, what was that, Monday, you had literally, Tuesday, I guess, you literally had all of the volume during the second half of the period focused at the bottom. Then you've got your huge gap down. You can see a lot of that volume is still focused at the bottom of the range on Wednesday. And then we did kind of capitulate on Thursday before really moving up on Friday. And you can see same thing though on this particular candle as well. On Friday, all of that volume in the second half of the period was at the high of the day or near the high of the day. And that just shows that, into the weekend, buyers were definitely in control. And so we cannot do multi-time frame analysis yet. So I'm going to switch this back over, multi-time frame analysis with raindrops yet above the weekly candle. So I will go back to hollows just to kind of show you guys where we caught a bid. And you can see this is pretty interesting. If we go back, this is about a year out, and you can see this is the beginning of October, exactly a year ago. We had our first kind of wave down, and this dashed line is actually the weekly exponential moving average. So I'm looking at the daily price action while overlaying this longer term time frame. So I don't have to have a split chart. I have all of my important levels on a single chart. And you can see how this shorter term price action respected this longer term area perfectly. And it's really interesting because if you go forward and look at the other times this has occurred since we broke out, notice how we broke down here in October, never got above this purple line. This is the SMA 20 from the weekly chart. And you can see this area really was respected hard, and then finally we broke down. Once the price action broke through these two areas, this was clearly the start of an uptrend. And you can see we did the same thing. We had our first wave right down to this general longer term area, barely missed it, but that's where your alerts come in, where you can actually just go and add your sensitivity, and you can create areas around that line so you don't have to hit the exact price, the moving average or price trend line, support line, whatever you're looking at. And so it's very interesting to see we did this exact move in August. We had our initial breakdown, bounced off this area of support. So this EMA 50 has really been a hard area of support below from the weekly chart. And throughout the whole month of August, we just pinballed back and forth between these two moving averages, give or take a couple margin of error points. But you can see we're at the same exact area. It's like deja vu again. Broke down, bounced off the EMA 50 from the weekly. You can see here, this is what's a little different from last October. Last October, we were never able to close above this line, not any one of these times. Here, we just closed above that weekly SMA 20, but you can see here that didn't mean we were out of the woods back in August. There was that breakout, and then you had right back down. And the problem here is this is a very headline-driven market. So, you know, if we've got a really strong kind of reaction to what the China trade talks coming out or whatever, we may just squeeze right back and test these all-time highs. And that's where I'd create an alert here and say, you know, if we do break out, alert me when we touch anywhere within this purple area. I have it alert me whenever the 5-minute candle gets in this area. I'll just name it retest all-time highs, and I'll have it expire in 10 days because I think if we're going to squeeze, it's going to be in the next few days. And then I create the alert, and without me having to watch the chart like a hawk, I can know my upside area that the market may touch. And if we do pull back down, I just create an alert at the EMA 50, same way. And so now I've got this area, and notice how when we tested this area in August, all of these wicks tested this area. So if you were waiting for the confirmation candle on the daily, you would have missed a lot of this price action where you could have, scalped this at, anywhere near here, went long until the SMA 20 or whatever your strategy could have been. But the point is, if you only were looking at the actual line, you would have never really been able to capture that action. So increasing the margin of error here really gives you the ability to catch those wicks. And so you want to make sure the confirmation candle is here, 15 minutes. So whenever the 15-minute candle closes within this line, I'll be alerted. And the thing is, I don't have to wait for the daily candle to close now. And it doesn't mean I'm day trading, but it doesn't matter if you're an investor. You got to buy the stock at some point, and that's always going to be intraday. So you want to have those confirmation candles definitely on the 15-minute or intraday if you want to actually make a purchase. We've got the EMA 50. We'll have this expire in 10 days as well. And so now, this is a touch. So now I've got my two areas that I'm going to be alerted. This is what I would call like the status quo area. If the price action breaks through above here, this is kind of the status quo changer where we're breaking to new all-time highs. If we break down below the EMA 50, you can see this area has been respected since January. If the price breaks down through this area, that's going to change the status quo and maybe make a case for the bears. So the point is not to have any bias here. You just create your levels on both sides and you trade the market as it comes to you. And so that's something that we really want to, you know, add utility to users where you're not chasing the chart. You're having these levels be defined, whether that's a trend line, a moving average, a set of conditions on the multi-factor alerts, where you could go in and say, you know, alert me when the daily MACD fast crosses up through the daily MACD slow. So then, you know, you can see here, this is another variable I'm looking for. Notice how many times we were at this exact area. I would call this like the second little wave, or like kind of the dead cat bounce. And you can see every time the MACD had a little bit of a turn to the upside here, looking like it may turn, and then you've got your continuation down. Same thing here at 2, you've got your fake out almost to the upside, continuation down. 2 right here, you've got your kind of curl to the upside, continued breakdown. So we're at 2, the MACD starting to curl. For me, I really want to see that fast cross through the slow to see if there's really conviction here, and that's what I just did. I went to the alerts. You can see the alert here. It's just the MACD cross, and so if we go and change this, I can change the name to MACD bullish, and all I had to do here without any coding on PineScript or Python, the daily MACD fast crossed up through the slow, create alert. Now I'm going to be alerted when that happens. I don't have to watch the screen. I don't have to code anything in. It just alerts me when it happens. So that's something that I wanted to go over. One thing that I wanted to show lastly with the raindrops is just the example of the cues. Same type of thing though. You can see we didn't necessarily get exactly to this line. And this is a great example of every individual ticker is going to have its own personality, meaning, you know, you can't assume that every stock in the market just in, you know, the markets, especially even SPY stocks, are going to be on the EMA 50 as well. It's just an area that can be particular to one stock. Notice here, you know, this is something else the price action is reacting to. I don't know what it is. It may just be a function of where the SPY catches a bid and it moves with that. But you can see that, you know, we never touch this area. And the alert area is what really makes this whole process more simple, where you can define a bigger area and then you can capture those wicks very easily. And so that's one thing I wanted to show you guys, as well as the raindrops here. Same type of deal. On Thursday, you had a huge range, and then you can see during the second half of the period here, you really had the buyers in control, creating new highs into the close, and all of that volume focused near the top of the range. And then you've got your nice gap up. Pretty much you've got this gap still kind of there because you just gapped right up through it again. But yeah, you got a strong move up on Friday, and just showing you that buyers were definitely there. Sellers were definitely present here. You had your continuation down. You had your continuation up. So that is all I wanted to share. I hope everyone found this you know, useful and interesting. I did want to go over the roadmap now that we're in Q4. We did a lot of updates in Q3. You can see all of them down here. I'm not going to go over each one of them, but we really worked on a ton of different features to make the product more user-friendly, the user experience a lot smoother. And in Q4, we're really going to work on the scanning capabilities, the ability to create the multi-factor alert, which I just created with the MACD, except you can make that alert and then make it on an entire watch list. So you don't have to go and individually put that on each stock. You can currently save, let's say, the MACD cross as a template. So you just name it MACD cross bullish. But if you want to actually just apply that to a watch list alert functionality, that will be coming this quarter. Pattern recognition is something we're also working on. So being able to recognize patterns easily, and really continuing, to update the user experience on just being able to drag the chart. We're going to be adding the Ichimoku cloud. Hopefully in the next couple weeks. We are testing that out right now. And we do hope to have the ability to draw to the right of the screen sometime this this quarter as well. So no promises on the exact timing there, but we do continue and strive to make the best product out there with the best user experience. So thank you guys for your time this Sunday morning, and a big thank you to Patrick for jumping on and showing us how he looks at the charts on a daily basis. And make sure to check out TheChartReport.com. There's a lot of great info that's posted every day, not only on their Twitter account, which you can, if Dan is still on this call, Dan, if you could just post that account. And you guys can also go to TheChartReport.com as well. So we have, a lot of respect for what you guys are doing, because you're really trying to filter out the noise and just show the best quality charts and analysis out there. And, we hope to see more people over time using the TrendSpider charts to show their opinions and that type of thing, or just their analysis in general.
Yeah, thanks for having me, Jake.
Hey, you're very welcome. And we will answer any questions if you guys have any questions for us. Looks like we have a couple maybe coming in here. And thank you guys again. And Patrick, I hope we'll have you on again soon. We really appreciate it, and that was a great presentation.
Yeah, big fan of what you guys are doing as well.
Thank you. Let's see, any questions? We'll do about 30 more seconds, and if no one has any questions, does this work on futures? Right now, we do have futures data, but it's going to be delayed until the end of the day. You can still look at the intraday granularity, meaning that you can go back and look at the 5-minute chart on the futures chart once it's closed for the day. Alrighty, Don, possibly a question. So Dan, I don't have an exact time on that. Broker integration is something we do hope to implement next year in the first half of the year. Just don't have a solid date on that. There's no mobile app yet. That's something that's 100% on the roadmap, but right now that's just not something we've been able to get to quite yet. Alrighty. We will wrap it up then. And everyone, thank you again for being on the webinar this Sunday. For those that are listening to the recording, thank you so much for registering and giving it a listen. And once again, a big thank you to Patrick for being a guest. If you guys want to get 5% off any plan, type in TCR5 in the coupon code when you go to sign up, and you'll be able to take advantage there. Thank you guys so much for joining, and have a great rest of your weekend, and we will be on again next Sunday. Thanks so much.